The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 25th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bulls have to say about what these markets are doing. Now, we'll look at the bulls and the bears, see what they're communicating, what the buyers and the sellers are telling you and I at just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. More importantly, though, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. That's how you reach us. Of course, you can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. Let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow traded up 153 points at 2,065. S&P is up 16 points. She's trading at 2295. Hey, nobody's talking about 2,300 for the S&P. Probably we ought to. Then 2,350, then 2,400, then 2,500 out there. Not going to happen overnight, but it is going to happen. The NDX 100 trading up 43 points, trading out 51.43. NASDAQ Composite up 45 points. They're up 0.8% out here. Russell 2000. She's trading up 0.7%, up 10 points, trading at 1379. Semiconductors up 9. Everything is green across the board, indice-wise. To the downside, though, you've got Goldilocks trading back $14 at 11.96. Silver's off 21 cents at 16.97. Light sweet crude is flat, trading at 53.14. A leader dollar-wise to the upside is Intuitive Surgical, up $25, nearly 4%. Amazon is up 13, 1 6/10%. Market Access Holdings, it's up 7%, 11.72. Bob Evans on the farm. Bob Evans Farm Sausage is up 21%. Wow. Rockwell Automation up $10. Boeing is up 7. Martin Marietta, that's up $8. To the downside, Equinix Inc. 1 3/10. It's $5 to the downside. Textron down 11% or $5. Commvault Systems down 8% or nearly $5. So we've got things to look at to the upside and to the downside. But where do we want to begin? Where do we want to begin? Where are the markets headed? Well, markets are headed higher. They're headed a lot higher. The January bottom happened to come in on January 23rd out there. So now what should we expect? We should expect the markets to move higher for the next couple of weeks before it really takes much of any kind of a breather. And it could take a significant breather in a couple of weeks, but you should anticipate that the markets are going to continue to move higher. Now, when you are above, if we take a look at our futures indices out here, with the exception of the Russell 2000, which, by the way, is set up to 1395. That is its TAS weekly profile. The Dow is above resistance, and we're going to utilize, and we have to, right? There's on the left side of the trade out here, right? Swing points. They don't exist. So we're into new territory. It means we can continue to climb. The question becomes, so what do we use as lines of demarcation when you don't have anything to the left-hand side to identify where price would head to, should head to, could head to? We can certainly take a look at expansions of swing points. That is going to be one set of tools out here. You would need to do that for the ES. You would need to do that for the Dow. You would need to do that for the NASDAQ out here. NASDAQ right now is made a 1 to 1.2728 to be equal CD to the upside. a 1.6, a butterfly expansion. In fact, a 1.618 expansion. If we take a look at expansions of swing points, that being the swing point, the October 25th high down to the low out there on election eve, down on November the 9th. So some people might just sell the heck out of it right here, right now. I would say, something to think about, such as the something to think about that the NQ wants to continue to head higher out there. I would have a different opinion if we saw some type of bearish reversal signal, but there's none in sight out here. Now, this is one way, one set of tools to help identify where price is headed to. When you just simply clear the left-hand side of any kind of resistance out there, boy, that is when these horizontal trading ranges really come into play, because they really help us tell the story about what the market was doing. Now, as was pointed out, as we take a look at the ESPN, it was pointed out by one of our dinners out here, and he was so right. There was like 71, 72, 73 days. I don't recall the exact number. I think it's a little bit different, but there was like 70 plus days where the S&P or the ES mini, I believe it was the ES mini that he was using, had not moved more than 1% out here. In fact, if we take a look at that, where did I put that? There we go, right here. Let's change this to the ES mini. I think that's what it was. Hadn't moved more than 1% out there. Oh, geez. So, and you're right now, today's move from yesterday's close, 1.24% out here. I guess what I should do is, and I mean, it was a very quiet period. I had not found inside of the ES Mini a period that was as quiet for so long. If we're going to go ahead and use as a quiet period, moves of at least 1%. To either the upside or to the downside out here. Let's just make that yellow line an exact 1%. Then you'll see where we're at. Let's go ahead and make that line just a tad thinner out here. And the last, so, well, is that true? 1%? Must not have been the ES Mini. It must have been the S&P 500 out there. But in any event, here's basically what it's saying. We finally cracked that level. The last time that we had a long period of time, now that we've got the ES Mini up, let's just take a look at that. A long period of time. That long period of time, if I measure that in days, just to give you an idea out here, that would have been from right here down to about right there. That was 28 days. Yeah, interesting. That's a typical cycle inside of the markets out here. And then once we got over that 1% move, the market just continued cruising to the upside. This is not a blow off top or something along those lines. This is an initiation of a cycle pattern that suggested that the Dow, in fact, could bottom 2 days ago. I wouldn't have believed it if I hadn't done all the work with my own eyes. And in fact, that's what we have that is going on inside the market. So should prices continue to move higher? Let's just stay with the ES Mini theme here for a moment. Let's go take a look at what his next horizontal trading range level is. You see, price had been hovering around this 2260 area. And in fact, I didn't realize that. We saw how price was coming down there. There were some other things, other intraday charts that were showing support in this 2260 area. I didn't know, because I hadn't taken a look at the daily chart on the ES Mini, that 2260 was in fact a horizontal trading range boundary line. And price stayed at it, tested it. Guess what? Yesterday, it rejected it. Today, it's rejecting it with all kinds of enthusiasm. The next stop on this railway ticking to the upside is not till we get to 2331. Maybe there we get a little pause before it heads to 2402. Steve Rhodes with TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're really taking a look at some of our charts out here. I'm looking at the equity futures contracts out here, and especially because in light of the folks, men and women that trade these contracts inside the Tiger's Den, so that way they can visually see what the market is actually communicating to you and I as we speak. Now, the messages are going to be different if you're trading a 1-minute chart versus a daily chart. This is a daily chart that we're looking at. That way, I want to make sure that you have the bigger picture and that you can understand, hey, what was the market actually doing here for the last couple of weeks, longer in some cases. And that way it's visually, we're all visual with regard to learning. It makes it very easy for us to say, aha, if this has been working in the past. Now, these horizontal trading ranges really brought to us, developed by Bud Rolfs, who referred to them as primary trading range boundary lines. The difference between what Bud's work and the work that you're looking at on these screens out here is he was doing all of his stuff manually, like each of us had to do at times. But because of all that manual work, and it was also eyeballing it. There's nothing wrong with eyeballing it. But hey, in today's day and age of electronics and data, right, data mining, and what Bud was also always looking for was the largest number of co-located, meaning it didn't matter whether it's an open or a close, but it was always the body of the candle, which is, as you know, the essence of price out here, looking for the largest number of points of contacts and trying to find the second largest and the third largest to come up with an equidistant value. And what he found, and what we have found, is that those areas typically contain price, whether price moving higher or lower or just moving sideways. Where is it moving in between out here? It's just like any kind of hurdle that you or others may have had to overcome in life. You kind of, you play tennis, you play golf, you get up to one level, you kind of stick there for a while, and eventually you get the juggernaut, and you either head to the upside because you've tried something that works, or you head back to the downside. You know this out here in anything it is that you do in life. It works the same way, right, in the markets. We're just looking at the emotion of the markets out here, and then utilizing that information to be able to plan what is likely to happen next. Well, in the case of the NQ, you're going to see a red horizontal line. It's a daily chart we're looking at, but it really is referring to the monthly, because a monthly candle is going to have a different open and close for the most part than a daily versus a weekly, and the green lines are the weekly. And at 50,015, right around there, to 5038, we had monthly, we had weekly, and we had daily horizontal trading range levels. Why was it so hard to get through that? Because that was what we would call significant resistance. Now, when you break through these levels, and in essence, the real break through these levels began right around January 11th. And you got over it, you came back, you tested, over, test, over, test, over, test, over, test. The whole idea of the get over, come back and test it is so that you can confirm that you are out of that lower trading range boundary area. And now it's a clear break. Yesterday was a break. Today is follow through. It is a real clear break. And if you want to understand where the NQ is headed to with regard to its horizontal trading ranges, the next potential pit stop is 51.76, the midpoint of its daily horizontal trading range. It does not have to stop there. It can. You can see here on some of these little dotted points. That's the dotted points. The solid lines are the significant ones. The dotted lines are what he used to refer to as mid PTR, type ice out there, which can act as an area where a market can reverse. So you want to watch 51.76. I also suggest that what you want to do is you want to be able to buy the pullback out here because we are in a favorable seasonal period for at least the next 2 weeks, if not longer, but at least the next couple of weeks out there. And these numbers are calculated. It's very simple. I'll put this up here, put a monthly chart out here on my screen. And the way that these are calculated, so you'll see them. Let me do this here. Let me do this. Let me go ahead and, oops, I got to do it the right way here. Let me make it a little bit less cluttered for you. And I'll turn off the daily as we speak right now. And I'm going to turn off the monthly too, though we're going to leave a monthly chart. The question is, please explain how these numbers are calculated. What I want you to take notice of, so this data here goes back to 1999. So it's all going to be dependent upon the data that you use in order to be able to generate these numbers. Well, this chart here, my data goes back to August of 1999. And what the system is automatically doing is it's looking at each monthly open or close, and it's trying to identify where is it that price had the most points of contact. Well, let me actually show you those most points of contact because I can numerically show this to you. I just have to turn that feature on. Here is our horizontal trading range strength number. And the largest number of points of contact, opens or closes inside of the NQ, took place at 1487.64. Now, we're not going to get exact to the tick, the penny down there, but 1487. There were 30 opens and or closes that occurred on a weekly basis. I'm sorry, green lines are weekly. Even though I'm looking at monthly charts, it's easier to squish, technical terms, squish this on the chart. The second most number points of contact out here inside of the NQ is at 1833, 22 points of contact. Once we have that distance, then all we need to do is just continue to add that same distance to the upper and lower boundary area. And you can see how well it works with regard to where price may stop, may turn back. Now, I don't have the midpoints in here. And where price can pull back to into significant levels of either support or resistance. Inside the NQ, you can clearly see that price is well above the resistance of 49.43. So if you're an intermediate term trader, you already know that the next area to be keeping an eye on is going to be 52.89. So hence, if I just simply turn off the weeklies out here, the weekly horizontal trading range numbers, I switch this to a daily out here, and I just simply come back and I turn my dailies on. This will populate here. It just takes a few moments to calculate, recalibrate with all that data, and then this thing will, hocus pocus dominocus, will go ahead and recalibrate for us. So price headed to that 52.31-ish type level inside of the NQ, and it's really helpful, especially when you are above all kinds of left side resistance out there. There is nothing to stop the market from moving higher. One you could say, hey, volume, just simply buying dries up out here. Yeah, that would be one thing. You could say, yeah, you know what, there's just simply not enough market breadth or something like that. Now, I know that none of you are saying that because you know none of that to be the case. In fact, you know that market breadth here inside these markets is as strong as it ever has been market breadth-wise, okay, because that is key. Somebody said, how do you identify liquidity in a marketplace? Well, One of the simple ways, if we take a look at just simply ETFs, you can do this at home on your system. And that's just take a look at, for example, let's stay with the Qs. Let's stay with the theme of the Qs out here. The top portion of my screen is the equal weighted Qs out here. That means that 1 through 108, I think that's how many instruments are inside of the Qs, are pulling their weight. Everyone. Apple has the exact same equal weighted as number 108 inside of that index. And this is making new all-time highs. There's a problem in River City if the equal weight is not making higher highs when the Qs are, just as was the example back here in October of 2016. And we saw a nice little correction. There wasn't enough market breadth out there. Plenty of market breadth. No, did I say plenty, like good and plenty? Some of you, do you like good and plenty? Do you like licorice? By the way, the equal-weighted S&P 500, new all-time high. SPYs, new all-time high. Liquidity, gobs of liquidity. Steve Rhodes, TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 160 right now. Got a email that came in. Hey, got a little high-pitched voice there. It says, Steve, I am listening to your show and recall that you had earlier indicated we would get a pullback around January 30th. I was waiting for that pullback to get into the SPY, but it seems based on your comments today and recent action that the market is going higher and I should take a position now, correct? If not, what would be a good entry point on the SPY? So let's take a look at that. And what this viewer, listener, was taking a look at And so was I, by the way, looking at the seasonal cycle. Seasonal cycle looks like this. The seasonal cycle says that this is a one-year seasonal, says that we get and this is over the course of the last 85 years, that we get a retracement that begins right around January 6th. In this case here, the Dow's retracement was or the top was January 6th. That was until today. And we get a retracement going into the end of the month. Sometimes it comes a little bit early. There was knocking at the door like it did this time. Sometimes it takes place a little bit later. What you typically get is some type of pattern. What you typically get is some type of A to B equals CD pattern, or you get some type of price moving lower, less relative energy. You get some type of seventh wave count. You get some type of pattern out there that gives us the signal, pattern's complete, time to start moving to the upside out here. In this case, now if you want to understand this pattern here, what it really says, I've got some little intermediate bumps that are dated out there, such as February 3rd, February 19th, March the 2nd, and markets move higher into May. And this pattern works real well. This is the largest undercurrent inside of every market. Now, the really cool thing about this is that when the January bottom does form, if this cycle really is taking hold, those lows will never be explored again. So how do we know when this cycle is not working? Yes, those lows get penetrated. You start to see closes below, and then it says, you know what, this undercurrent, this cycle pattern here is not the dominant pattern. It still is, right, because it gives us around the end of January. Well, you know, when we took a look at those horizontal trading ranges inside of the Dow, that's actually what it was doing. It was giving us a pattern. I just didn't pick up on it. My apology. Well, I did pick up on it, I think, on Monday when I was on Tom's show, and I said, hey, you know what, doing the segment, because I always like to prepare for that show, give you guys something new, something to think about, something that would assist us with regard to what the markets are doing, something different than what we typically look at. And that was basically this. That was saying, hey, you know what? Whoops, what the heck did I just do there? That wasn't it. Oh, my goodness. Oh, it's right here. Slideshow from current slide. There we go. I combined all of the first year of a brand new president cycle, regardless of party. You know, because I've got all this data. And I like to churn this data to see if I can identify some type of cycle out here. And what this showed us was that on January 23rd, on Monday, that is when, during this presidential cycle system of the first year of a brand new president, that the market formed, or the Dow, I should say, forms a bottom on January 23rd. And lo and behold, if that is not in fact what took place, no A to B equals CD pattern that forms out here, we can see that to be the case. Instead, what we had was basically a horizontal trading range that held. Now, to answer your question, I suggest the market will head higher into February 10th, February 9th, February 10th to be exact. And it looks like a straight up move. So that means with regard to this listener out here, you know, should you jump on board now? You could begin building a position using a wide stop out here. I don't have now the market typically will retrace. Now that market could just be nothing more than the equity futures markets that could retrace overnight and then go ahead and take off before you can buy in the cash market. Your specific question was with regard to the SPY. You know, so what do you do now? And what you might also do now is look outside of the equities, maybe the indexes. Maybe you start looking for some individual stocks, maybe something, maybe a sector, maybe something that's just beginning to take off. You know, you have lots of different options out here, but that January 30th cycle came in on January 23rd. Now, it does look like we have a pretty decent correction, although I don't get too hung up into the size of these moves out here because it's averaged data over an 85-year period. It's more so with regard to the direction or when you should identify some type of market top or bottom out here. So you have other options, other choices. But if we just went ahead with what happens on average with regard to that last chart here, the market just keeps cruising. You know, I don't know how many points a day or what have you, but you didn't see much of a pullback or a retracement there. You know, so you've got options out here as far as what you can do. You can take a look at, as an example, The industrial sector, let's go take a look at it. The industrial sector today is confirming an A to B equals CD to the upside. Now, the B point out here, 6407, this is a daily chart we're looking at. December 7th had volume of 10.4 million shares. It's 130. We've done 8 million shares. It seems to me that we're going to do more than 10 million shares. You're going to get a confirmed A to B equals CD inside of the industrials. Now, with regard to inside of the industrials, what you could do is we could actually go see what all of those holdings are inside of the XLI. So I'm going to go ahead and do this for you, right? I can't do all the work on the show during this time period, but here is all of the holdings inside of the XLI. Now, interestingly enough, GE happens to be the number one weighted holding with inside of it. In fact, let's just go take a look at the number one weighted equity inside here, because, you know, there is the belief, and it's a good belief, that the direction of GE, that the market typically will travel in the direction of GE. When you see a divergence, it is GE that is really giving us a signal here. Now, interestingly enough, General Electric had a real breakout session. I mean, it was a real rip-roaring party. That was back on November the 10th with 81 million shares to the upside. You talk about wide-ranging bars, accelerated volume. Well, that had it all out there. Price did run into resistance of its TAS weekly profile, but was able to get above it the very next trading session out here. Another little sign of strength on December 16th, up near its most recent high with 72 million shares, so that's a wonderful thing. Now, a few trading days ago, 3 to be specific, you had volume of 83 million coming down into 81 million. So it was coming back to the breakout area. And we're still trading inside that candle right now, but price is back above a weekly profile. This suggests to us, because that weekly profile, quite frankly, is actually set up with a bullish bias, point of control, little dash line closer to the bottom of the box, suggests that price at least can head up there. So you should anticipate that General Electric is going to head up to the 31 level. That suggests that the Dow should also continue moving higher out here. If, in fact, this analysis is worth a hill of beans, and I think that it is, right at that daily, right at that weekly point of control happens to be the bottom of a brand new box out here. So that could be a stiff level of resistance. In fact, that profile formed today. And when a profile forms at a higher level than where price is at, that actually can be a very bearish message out there. So if you're a bear out there, a grizzly bear, you kind of like that. But that doesn't mean that price is not going to get up there. What that means is that if price is able to overtake 30.89, get back inside that box, nothing more bullish than a failed bearish pattern out here. So General Electric as the number one. I don't know that this is the one inside the industrials that I would say you go take a stab at, but, you know, you go through this entire listing. There is 69 different individual holdings. The one with the least weighting in it is Pitney Bowes. PBI is the ticker symbol. So just start going through these one by one. You can find all this data on the World Wide Web out there. You can find it on the line, as they say in that movie. Great movie. Anyway, Steve Rhodes with TFNN. Great.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 20,073 is the print inside the Dow, up 161 points. I'd anticipate a plus 200, plus 250 day by the end of the day. And you know I hate to say that. Let's go to Don in Dunedin. Don, thanks for calling. Thanks for holding. How are you doing this afternoon?
Hey, I'm doing great, Steve. How you doing over there?
Excellent. Nice to hear your voice. Hope life is going well.
This is the first time I finally got to call you in. I'm usually up in the Georgia mountains, and I always send you an email to do the stuff
Yes.
and take a look at it. Now I get to talk to you personally.
Yeah, perfect. And you're tracking California Resource Corp, CRC. Tell the listeners, tell myself what it is you've been looking at, what you're doing, how we can help you.
All right. Currently, it's at 22.28. I bought in 1,000 shares at 21.20. I have a profit that is set at 23.17. I have a stop loss now at 21.65. I think the first resistance is going to be around 22.80, and my second resistance will be about 24.30. And I'm just wondering when you think. I currently, like I said, I have my profit exit at 23.17. I'm wondering if I could raise that up or not. You can take a look at that.
It sounds like this is just a trade versus a longer-term investment. Am I hearing that correct?
It's trade, yeah. What happens is my spreadsheet comes back and tells me, hey, go out and buy this stock. And then it runs for a while. It shows on, and then all of a sudden it'll come back and tell me when it hits certain things that I have set into it.
Sure,
And,
okay.
Right now, I'm owning it. And
Okay, so here's if we're going to do so our analysis. So first of all, spot on, nice analysis there. The resistance level is 2280, and considering today's high has been 2266, we're going to call that close enough for our workout here. So we know that it's into resistance. The last swing high out here was January 3rd. So, it's still holiday type of traffic, so to speak. 1.8 million shares. You've done 1.1 right now. So it seems like you're on pace to do that level. That's just quick math inside my brain. So maybe it's a little shy, maybe it's a little bit over. But it's running right into resistance. Ideally, if you're going to stay with the trade, you want to see this, and it's also coming into its swing point from back in April of 2016 that had 2.3 million shares. Ideally, when price moves into a prior level of resistance or a prior swing point, you like to see it coming in with volume. This is not. That doesn't mean that it can't move up and it can't test that next level. Unfortunately, and as long as it closes above 2130, then it says, okay, maybe I can get to 2550. So you've got to make that determination. Is it worth the reward to risk out here? Now, I don't know how California Resource Corp trades with the market. This is a natural gas, I think, an oil type play out here.
It's a natural. Yeah, it's an independent oil company, natural gas exploration and regular gas.
Yeah. So have you done the work to see how influenced that price inside this stock is driven based upon either natural gas or light sweet crude is doing from a commodity standpoint?
I think it follows more to the crude.
It does. Okay. So then I would say okay, as an alternative, if it follows crude more, let's go with that as the idea. What's crude oil doing? Is crude oil getting ready to bust out to the upside, which would give you the reason to go ahead and continue to stay with this since it's just a trade? And crude oil is basically doing nothing. It's trading in a range from $52 to maybe $55. It's as if crude oil doesn't really care what the U.S. dollar index is doing, back 226 pennies as we speak right now, and crude oil basically is flat on the day. So crude oil isn't exactly it's not giving you a negative message. It's just not giving you a real positive message here with regard to what this equity might do next. That's the CRC. So, I would just say it was just a trade. Take at least some of the profit off the table.
Okay.
Take at least some. Here's the other thing you've got going for it on a day like today, and that is I'm going to turn off price, and we're just going to look at the market profiles out here. I'm going to turn off the weekly, and that is that this daily box out here, the point of control is closer to the top of the box. That says in this pricing area, it's really sellers that are in control. And so, it's running into resistance, hasn't been able to clear it. That's where I would say, hey, not a bad idea to take some profits. If this were a longer-term trade and you were kind of on the fence, I'd say get all your principal back and then let this thing ride out here. But that doesn't seem like that's really what's in the cards for you. So it's running into resistance. It doesn't have the volume in it, and I say there's no problem in really ringing the register for you.
Okay. Well, here's the real kicker on this stock. My back testing in Excel came back and told me at $3.86, get in there and buy it, but I missed it.
Okay.
It went straight up to nothing flat up to the current pricing.
Yeah. It certainly has had a nice run on the weekly basis. Just out of curiosity, let me just take a look at. This is just simply
mode in weekly and monthly.
What's that?
It's in consolidation mode in weekly and monthly at the moment.
Yeah, although I will say that you had a huge sign of strength that week of November 28th. So, any pullback, if this thing does pull back, 1985 would be, probably, you're kind of in this little trading range there. So there's no real other patterns that I see out here when I take a look at a weekly chart. But you have to love the week of November 28th. That is a real sign of strength off the bottom for this type of an equity. All righty.
All right. Thank you very much, Steve. Have a great day.
You too. That was Don calling from Dunedin, Florida out there. Okay, so Dow's up 159. What do we want to take a look at next? I haven't looked at the emails here, but I'm going to guess that I've got a couple emails asking about gold, right? So and I've got one asking if we take a look at the bond. So let's do. We can knock out both of those kind of at the same time out here. We love to always just say, hey, are the correlations still working out there? Those correlations being the yen, those being bonds, those being gold. This is the 10-minute chart out here, so you can see that directional correlation definitely in play out here. I mean, it's like bar to bar, red bars. The distances, the drops, moves higher or lower, are sometimes a little bit different, but sometimes really not that much. So we can see that the yen is just kind of meandering at the bottom out here. We can see that bonds have been hit a little bit harder directionally than the yen. Gold here looks pretty good because it's still trading with inside this low that formed at 930. 10-minute chart again that we're looking at, and right now just making a slightly higher high and potentially even a slightly lower low. In the case of gold, let me switch to a different workspace out here. Gold actually gave us a nice buy signal earlier in the day as it moved to lower prices as it got down to the 1192 area. Now you're at about 1196 right now. And it got right down to Stevie's red line. I mean, right down to it. And as long as it stays above Stevie's red line around 1192, everything looks good with regard to Goldilocks. If it starts getting below there, closing below there, then we've got some problems. Now, those problems are just simply that there's more of a retracement, well, so to speak. And here's where things can get a little dicey. Well, I'll have to show you the dicey part when we get back from this break. But we'll continue to look at gold. Then we'll go take a look at the 30-year and anything else that you'd like. Steve at TFNN.com or ping me inside the Tiger's Den. Of course, would love to hear your voice as well. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow at 2074 on its way to probably close above 21,000 today. Yeah, you can forget that 20,000 mark out here. Of course, we've been saying that for a long. 21,750, I believe, is really the next resting spot out here. Back to gold, back to Goldilocks. So here's where, what gold is behaving exactly the way that it should. In the newsletter subscribers and I, who are long mining equities and so forth, we've been aware of this pattern. We started looking at it last week to say, okay, here's what we need to anticipate. Gold is going to go ahead and pull back in to test Stevie's red line, that oscillator unchanged line out there. And it's really important that it stays above it. You folks have heard the expression, nothing more bearish than a falling price oscillator below zero. Well, when we see this little convergence out here, that tells us we are at the zero line. You can see the reading right now is 0.805, and that is the difference between two exponential moving averages, 19 and 39, just so we're clear on that. And coming back to test it, rejecting it and moving higher says the next leg to the upside is underway. So for those that were looking to get in mining equities and so forth, today is the test. I can't tell you whether it's going to hold or not. What I can suggest is that if it fails and gold starts to close below Stevie's red line, you exit that trade. You say, okay, I took a test, I minimized it. That was your insurance. It's like being able to go to Las Vegas, go ahead and put your money down, get your cards, and be able to take some of that money back instead of having to leave it all out there. I mean, that's really what this tool would suggest out here. And because if you start to see price get below that oscillator on change line, this price oscillator will be below the zero line, and it will also be falling. And that says that price will continue to fall. Doesn't mean that it's still not going to be a nice setup and a nice buy. Tells us we've got lower prices. You've got to start taking a look at other levels of support to pay attention to. But right now, today, what gold did was it came back. It tested an area that we've anticipated that would test. Now we've seen a rejection of that area. Of course, I'd like to see the yen start to vamoose to the upside out there. That would make me feel a whole lot better. Silver has done the same thing. Silver actually is more bullish than gold because, you see, it came back. It tested that oscillator and change line, and it has rejected it even further than Goldilocks has out here. So the metals are behaving very well. So if you were asking me the question, hey, didn't get in on any of those mining equities out there and would like to, where's my entry point? Today is the day. But you've got to watch those two levels out here in gold and silver. If they fail, see, I can't control what the market's going to do. I can tell you that I believe the market's going to finish up plus 200 today. I can't control whether it is or it isn't. I can give you price targets out here of where price is likely headed to because there's no resistance on the left-hand side. So where is price headed to? That really becomes pretty easy to do, but I can't control what that outcome is. I can help you to eliminate one side of the trade for sure. And right now, that side of the trade, unless you're a real intraday trader, is the short side of the trade. You should be thinking long. You should be thinking long for the next couple of weeks out here. Then maybe you can start to entertain short. Now, if there's some other signal that takes place at 3 o'clock in the afternoon or tomorrow or the next day, I have no problem changing my mind. Shoot, we went short, I think, on Monday, and then we closed out that position as soon as we saw the Dow break through that descending price channel. It took this much time. It took more time to write the email, send out the Twitter alert, than it did to know what action it was that we were going to go ahead and take, because I said that change in trend is underway here. So with regard to, I want to make sure that I'm clear with regard to anybody who says, hey, I'm going to go ahead and take action inside the mining sector out there. You've got the signal, and you have to also be prepared to say, no mas, close it out, because levels of support have failed. That is not what we've got right now. The same thing, we're out of time. But tomorrow I'll make sure that we cover bonds first, and then whatever other emails that we didn't get to. So stay tuned, folks. Our man David White is up next on the Tom O'Brien Show, and I'll see you on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.